Friday, March the 24th. Been a choppy week in trading. Some drawdowns in our E-mini S&P strategies. A lot of spikes in the market that come from out of nowhere. And we'll have the weekly results tomorrow. The stock indexes were challenging. SR counter trend gold was one of our top strategies. 3 winners in a row this week. So we're going to take a look at this new strategy called Pessimism. I think that's what I'll call it, because we're looking at, we released this idea earlier this month. We've actually talked about this in the past, several years back, how you can do this with the money management algorithms. And this is the latest on the money management algorithms, taking a negative equity curve strategy and finding the profitable trading periods in that negative equity curve, similar to counter trend trading. And it's part of our money management algorithms approach. I've added this money management area login. So if you have the money management algorithms, you can easily find the login link by going to this site, and you can get the members area and have access to all the examples. But here is Pessimism 1, and it's simply a 15-second dual moving average crossover strategy that has a negative equity curve. We talked about this in NinjaTrader as well, and I'm going to show you that. Can you turn losers into winners? You can find these under money management algorithms, TradeStation and multi-charts examples, and NinjaTrader examples. And so you can see negative equity curve, positive results, same principle, same moving average, a little bit different parameters. But we talked about this on the 15th. How did it work this week? I was looking at strategies, what worked this week, what didn't. Since we've had a bit of a choppy week and a drawdown in the stock indexes, which happens at times. And this strategy worked. We didn't trade it, but this worked. And so taking a further look at this, it's new. Here are the results of the last 6 months. Here is the equity curve. Last time we talked about this, the equity curve was right here on the 15th. We had a drawdown earlier this week with this strong trend, and then all the chop took us to new equity peaks. And so what are the weekly results? Here's the monthly results. And the weekly results are 1137.50 on 9 trades. And yesterday you see these 2 trades here. A long trade in the morning and a short trade in the evening. This is ideal. This is what we dream about as traders, is to catch the morning trend and then the evening trend. It doesn't always happen, but it did happen yesterday in this strategy. And so let's look at other trades. There's some losing trades this week, a long trade and then a short trade that lost. Can't fit all the trades in one day on this. You can't even see the entire trade sometimes. And so here is the trade on Tuesday, on Tuesday, where we had the big sell-off. And so it's not going to do well for the most part in a strong sell-off day. This is a incredible trend right here. And this was a challenging trend because we had some counter trend strategies in the market, and so it lost on these 2 trades, and then it started to go through a choppy period. And that's why we like counter trend strategies, is because we don't see markets that just have continuous trends for 3 days in a row anymore. It may happen in the future, but we have to look at what's going on right now, and that's the counter trend nature of this market. And this strategy, Pessimism 1, looks for these counter trend trades, mean reverting trades. We look for trading periods in the original strategy, such as this strategy right here, that are down by $100. You see all these little moving average crossovers. None of those are up or down by $100. And so if it's down by $100, that could be a good entry point, because it can mean revert. If it's a strong trend, it's going to lose. But if it continues to be a choppy market, and most of the time markets are choppy, then it can be a good mean reversion trade. Another idea that I will test this coming week and we'll let you know about is this right here. We talk about a mean reversion when it's down minus 100. But what happens when it's up 100? Well, it's probably too late to get into the trade if it's up 100. We don't want to jump in then. It might be a good trade, but we'll test that as well. But the next trade, so if the market starts to move and has a nice profit, could that be the time to take the next trade? For example, this trade right here was a nice winner. Should we have taken this next trade? We can't predict necessarily this trade right here, this nice breakout, but we can take the next trade, because the market has this tendency to slam down and then reverse, or spike and then reverse. And so these slam downs and spike create a positive trade, and then the next trade spikes back the other way, and then the moving average crossover could catch it the um, the reverse direction. So this is Pessimism 1. I'm going to officially name this Pessimism 1 because we're taking a negative equity curve on the left, and we're finding the profitable trading periods in that negative equity curve to create a positive equity curve. So that's the update on Pessimism 1. I'll have the updates for tomorrow from the strategies. SR counter trend gold, 3 trades in a row was the highlight of the week. Our exhaust in reverse had a bad week. Today it's coming back a little bit. Took a profit here. Profit target the very high of this move. So you had to cancel and that's why we cancel and replace the market and take the slippage. But it had a bad week, and Tick Pulse had a bad week so far. So it's part of trading. Sometimes we go through these choppy periods, and I will have the complete update tomorrow with the winners and losers of the week.